Fast business loans up to $2 million and above with bad credit, without collateral, and lower documentation. Plus, 0% interest funding and common mistakes to avoid. If you keep making these or if you feel like you're going to run into them, be very cautious and careful. This is a warning because if you go down this route, it'll be a lot to get out of. It might be very quick, but it might be just a quick shortcut and you're just masking the symptoms without going right to the diagnosis. I will also be sharing with you this value ladder, this other word, funding ladder, into another share screen in a moment. But before I do, my name is Michael with Viral Funding Solutions. Happy Monday, everybody. Welcome in. This is spontaneous. I did not broadcast this. So if you can join me today, please let me know in the comments. Where are you tuning in from? Please give me a hashtag live, hashtag replay if you'll be watching later on. I have a great one for you. I won't take up too much time. Hopefully we get out of here in about 15 to 20 minutes or so, but it'll be very well worth it. So what I want to go into is this whole value ladder concept on starting at the bottom and looking at the top, or you might be somewhere above, or you might be at the very top looking down, but everybody is in a different part of their funding journey. And I'm going to share with you guys in another share screen in a moment. So please stick with me. I'll be getting into the details of, hey, this is where you maybe begin, and this is where you want to end up, and so forth. But more so, I want to put this whole get a fast business loan or fast business funding with bad credit to rest and really start thinking a little bit more about what are the things you need to actually fix. Because if you continuously spiral down this whole I have bad credit and getting fast business funding, that doesn't translate into longer terms. That doesn't translate into lower interest. That just makes you a higher risk. So if you're a business owner with bad credit, I want 3 million, but I have a 580, even a 620, 630, you're getting more into the fair. Well, okay. That doesn't necessarily mean you'll be getting $2 million unless you're generating somewhere around $1 million and above already in monthly revenue and on your lowest month. So it's most important that you guys understand this. And I give you guys this sort of intro because I've seen a lot of content on this YouTube platform, on blogs, social media, and whether it is right or wrong information, I go, well, how deep do they go into this subject? I was on a consultation call last week with an individual telling me, hey, Michael, you're ready to be charging people like hundreds of dollars on an initial consult. And I went, I know my worth. But the reason why I don't do it is because I want to help as many people as I can. And maybe that evolves into the future, but I'm not doing that. Take a look at other people out there. Yeah, they're going to charge you $40, $50 for an initial consultation. And I'm not saying that's wrong or is it good, but just understand what you are paying for. And if it's even worth doing that, you can get the same information out of me versus going to somebody else you're charging $40 to $50 on. Or what if I do start charging you? Then we're talking different, but I can go into so many different levels because I understand profitability, cash flow statements. I understand how to build different businesses. I have a digital marketing agency, affiliate marketing ones, and a few other ventures. This is my primary focus. So without any more, let me jump into a different share screen so I can go over what it means to properly build your business from the bottom up. So let me copy and paste this, and I'll leave all information for you guys down below in the description. In this live, it won't be there, but as a replay, I should have it in the description, so that's where you can turn to. But before you go anywhere, make sure you guys understand this. Okay, so I'm in my Canva, and what I have put here together, and I'm going to scribble down a little bit more, is where the majority of business owners are and where they try to get to. But just keep in mind, guys, like this content, it's a little dark, isn't it? I have the HP lighting on. Sometimes it displays this way. But keep in mind that a lot of people on YouTube are just searching for, how do I get a business loan with an EIN? And it's so attractive. And how do I get a business loan without having to input my personal credit, without a social security number? Now, there's a time and a place for these things, especially when you're building your business credit. You got to differentiate personal from business. But how much information are you going to continue to seek before you actually understand something like this and go, well, I knew he was right, but I just have been avoiding it this whole time. See, what it takes for somebody to really take that next step is to go away from that fear, those beliefs. It's not just having a lower diminishing return, and more so about completely wiping and eliminating something. So if you say to yourself, or somebody tells you something, you can simply just say, okay, and, or you just go, all right, that happened. Now this is how this is going to turn out. So for a lot of you, you guys are accumulating a lot. It's like accumulating another loan, another year passes by. I remember being in that position where I didn't file correctly my returns because I was self-employed at a time, and I understood the quarterly taxes and all that component to it back some time ago. And I ended up having to pay more towards the end of the year instead of distributing it per quarter. If I was over, if I was under, this is what would happen. But like many of you, that was a long time ago too. And so these things come up, they happen. And so you just have to be more prepared after you learn your lessons, whether you go through them or not. But the thing is, you got to fix the actual diagnosis. So let me jump right into this and we'll close up here soon. So here at the bottom, you see the word start. Remove this. And this resembles the beginning phases of starting a business. Or it can be, hey, I have a non-startup, but this is where you begin. And at the very bottom pillar of this, what I call the funding ladder, or you can call it the funding stair steps, it's the starting point. A lot of you want this. A lot of you want to go from here to here right away. Like, I have to understand your business. I have to know that you can qualify for an SBA loan. And at the top here, if I didn't say, it's the SBA 7A, the SBA 504, the SBA 8A mentoring program. It's the cream of the top. The SBA is what everybody wants to get, but everybody doesn't look at what is in between all of this, what it takes to actually get this and then continue to have it, and even to start here and even beginning before the starting point. There's some stuff back here you have to build out. So I'm going to reverse engineer. You probably see me release content like this, but I want you guys to have a refresher. So the SBA loan, it's the very top. I won't get into it specifically on what those services entail. Just know that I've created content on this. I'll link you to down below in the description. You can also fill out the questionnaire, where then I will be able to get you a very personalized and customized email response on your best funding option and option. See, the number one thing, and this may hurt, let it. This is not aggressive. This is not negative. The number one thing I see in a business owner is character versus reputation. See, I work with numerous amount of business owners, and I know those business owners who are just trying to make that little shortcut, whether it's true or not. I can envision the things they're trying to do. And so what matters very greatly in all parts of the process are the character component to this. I know you probably heard me say this and you're sick and tired of it, but I have to emphasize it, that it's most important, because it'll also translate into the application, your character, your credit. That's another factor. And I made another video on that. I'll try to link you guys to down below. But I come from this place too, where I was in the 9-to-5 position, just trying to start my business, which is where we are looking at on this value ladder, funding ladder, and really working a 9-to-5 in a financial logistics position where I couldn't move up another position. I had somebody who was an ex-hardware engineer who did not want to retire. I was there for a lot of stability reasons, underpaid. And I thought about going back to school to finish up another semester of another degree and or getting other certifications, going into in a completely different field, not even financial wise. And I went to school and I studied hard. I worked hard in the math, in the chemistry classes, the sciences. I did all that, got the right degree that I needed. But working also construction, manufacturing, even jobs before that one in my younger 20s. But just having this whole realization after I went on unemployment again, and things that were out of my control that I had to do momentarily to continue to build up, and not feeling like I was just sitting at the bottom again. It wasn't a good feeling at all. And that's another story for another time. But let me go back into the screen here and continue. We'll close up here soon. So the SBA loans at the very top, again, I'm not going into the exact specifics. And if you guys have any questions, please link them down below or comment in the comment place. I was going to say description. Can't comment there. So the SBA 7A, 504, a few other programs are at the very top as, it's different for each person. So you may not look at the SBA being the very top. You may say, hey, it's a bank term loan. It's a business line of credit that's at the very top. So you may have a different diagram than I do. So just keep that in mind and in perspective. But underneath the SBA loans, you have what are, let me move this. I guess I'll leave it in red. And these are bank term loans. Bank term loans are this product, of course, that you get through the bank, FDIC certified, etc. There's online bank term loan lenders. I won't go through all the qualifications on this. I'll leave video content for it down below in the description in time. But just below the SBA, you have the bank term loan products. And these do normally require you to have stronger credit worthiness on the personal and business credit side, especially nowadays with everything happening in the market turns. But you're looking at that more time in business, usually above 2 years, 250,000 in annual revenue requirements for a lot of times. There are more things that you have to qualify through and hurdles. The underwriting can be a much faster process than the actual SBA loan. You might get it in 7 to 10 days in about 2 weeks or so, as opposed to an SBA loan taking 4 to 8 weeks, 1 to 3+ months in those cases. So getting a bank term loan in the meantime while getting you approved for an SBA loan may be the route to go. But the other question is, do you even qualify for it? Is it an online bank term, whether it is or not? It's traditional banking. Do you qualify? So let me go back into this. And what I want to put next to this one is above it, or it's right here on this stair step, is put the LOC. So this is the line of credit. This is what a lot of people want. This is the business line of credit, a true line of credit, not a revolving credit line through business credit cards and so forth. And this, again, we're looking at credit. It's a lot credit based, higher credit in this market, the revenue, the time in business, the industry, and there's more specific guidelines and regulations, especially in this market. Makes it more conservative and harder to get approved for. So everybody wants that business line of credit. I want that SBA loan. Okay, no, that didn't work. How about a term loan where I need to refinance that? Well, they won't look at it. They're going to look at it somewhat the same as the SBA did. Okay, how about a line of credit? If I didn't think about that before, do you have the 400 to 500,000 in annual revenue requirements nowadays? Just a 660 or 560 or 580 credit is not enough. 700 and above. These 8-tier lenders are issuing this, and these fintech companies, not always through the banks. If you have different entities and you can get funded through the bank, okay, that's one piece. And if you need my help with alternative lenders and private lenders, I'm here for it. I can also help with bank situations, but not all the time, depending on that type of service. Like business credit cards, it's different. We can work on your behalf and show you what you can put on an application and what you would need to do if you need to go in person, or is it online that you're applying. And I'm going to leave more information to this program down below for the 0% interest in business credit cards for 6 to 18 months that I've helped out a lot of people obtain, myself and my team included. So again, I'll link you to that down below in the qualifications and all other information. But just know that the line of credit, it's not necessarily going to be the end all be all. It might be the very top. It might not be the SBA. It might be the cap line program with the SBA. That's hard to get approved for other things. And so the line of credit could fall within that part of this funding ladder that you see right here. And again, we're not spending every single second in this video. I've already created content on all these services we're going to get into, and we'll try to close up here. We're going into the 14th minute mark. But line of credit, you can get it with unsecured financing, secured term loan, unsecured term loan. And what that means is unsecured, you don't have to provide any collateral. With these online term loan lenders, a lot of the times you don't have to provide that collateral piece. Even some of the traditional banks may not expect that from you, but you'll see a lien on business assets. If not all, they might put a lien on your home. They might use that as collateral. So not every one of them is created equal. And I have the best for these offline and online, just so you know, and all different services you're seeing today. And I'm going to get into some of the real estate side. So if you guys want to stick with me towards the end of this video, but it could be non-collateralized. It can be at the same time. It just depends on your needs, what you can qualify for. Do you need more funding, but you have a home, or you can pull equity out of? Are you looking at a home equity line of credit? What are the advantages between that and a personal line of credit, home equity line of credit, or getting the SBA right away? Is it a time thing? It just depends. The HELOC would be my last resort, as well as my 401k IRA, as well as would be my assets. I would try to protect that first, and then look at getting unsecured financing where, hey, I might have to start with a little bit, but then I can grow in time. A lot of business owners you guys wouldn't imagine who are in my email inbox who are like, if I don't get $1 million or $2 million, I don't want this funding. And some people who are out of line with what they say, I pay no mind to them anymore. And so I'm trying to show you guys without right now going into each specific service and breaking down the requirements and all that. I'll have information down below, but I'll also have that questionnaire, if you guys have heard me say it, down below so you can get a very personalized and customized email response. That is where you want to begin. So let's move forward with this. Again, we're not getting into all the specific secured funding details to the line of credit or the secured funding details to the business term loan or unsecured or what happens with the SBA qualifications. I'll have more of that down below, as well as the questionnaire. That's where you want to begin if you haven't. And if you have, I'll get back to you in time. Now, underneath this, what I would like to say it is, I know that looks funky, but it says collateral. And what I mean by this can be a level lower or it can be also a level above the line of credit and business term loans, which you can use it with collateral or without. But the collateralized option can be just underneath the SBA. If not, it depends on your value ladder, on your funding ladder. And so what that means is you can use any assets like inventory, account receivables, in other words, unpaid invoices to a factoring company. There is also the heavy equipment. Sometimes we can do trucks for a trucking company. If you're generating high revenue, you have been over leveraged in many regards. There's so many other things that we can take. Real estate, commercial real estate, that's high value property. There's some instances where we can't take trucks, of course, depending on the business. And if you're already over leveraged, if you're not over leveraged, again, I said inventory. There are quite a few more of them, though. Stocks, bonds, mutual funds, ERS, retirement, that can be a bit tricky to pull out from. And sometimes it's not always a given. It's not always something that you can do. You have marginal accounts, financial security bonds. The list can go on, guys. And sometimes we can add multiples. So just keep that in mind. And that's a way of financing what you need. It depends on your current needs. Everybody's different. And if that's something you want to communicate with me, you can. So do. I know this isn't the most attractive content, guys. Brief interruption. You guys are looking again, like I said, for those EIN only, those Social Security only, best small business loans, and just want to apply because you just hear it and it sounds so good. But this is the stuff that gets into the core, your nucleus, where you start to understand it a little bit better. Not that it hurts as a person, but it's just, hey, these are the services. This is the funding ladder. This is what it takes. This is where I'm at. And this is where I can get to. And I design these plans for people. And they even email me back, hey, Michael, here's my situation with this, and it looks all concrete. They think similarly to the way that I think and compartmentalize and break things down. And I go, yeah, that does look good. I'll respond back to them. Maybe I'll give them an addition and I'll say, hey, this is an addition to your subtraction. This is what we need to multiply. This is how we're going to divide this. And if we need to do this incrementally or we need to do it all at once, or how does it all work? I'll be there along the way. So right here, going away from the collateral, again, not all the requirements that I'm going into at the moment, but we can get you in normally without any revenue requirements. Some of them do require that you have revenue for certain businesses. And it's less of a credit requirement and it's more of just seeing what kind of assets you have on hand, and we can increase the term on this. And this is another thing that I want to say before I move into the quick next part is if you're a business owner or an owner who's depositing infrequently or are, and you're thinking about how you can get a longer term to lower also your repayment with lower interest, that way your depositing frequency isn't so much of the issue anymore, then things like collateralizing it with hard assets, any kind of assets, line of credit can work, especially for emergency funds and more. The business term loan can, spread out your term so you have more for working capital, more for those expenses, things that suddenly arise up. You have growth and expansion projects, and you can better be prepared for that future. Instead of getting something shorter term, maybe you're given between 4 to 24 months, which isn't bad. I've taken those myself. You just have to have a good use for them. You can't say, I want this amount and I want a longer term if you can't qualify for it. Well, you have to scale back, Mr. or Mrs., and say, hey, I wanted 100,000. You may or may not get, but what if you started with 20,000? Would that 20,000 paying back 27,000 over 8 to 9 months be better benefited to you than to say, I'm going to start off with 100,000, paying back 160, 70,000 if you don't feel comfortable with that, even if you didn't get approved for that or you did get approved for it. You have to always keep in mind what you are, one, using those funds for. What is that return on the investment? that's ultimately it. A lot of business owners come to me going, Michael, I want funding. Great. What are your use of funds for? What is your return on investment activity, financial? What would it look like in a week, in a month, in 2 months? How would it look like in 6 months? How about a year in? Well, I predict and I assume that, well, okay, where are these predictions and assumptions coming from? Are they coming from past history? Because that's where they should be coming from. Are you just starting a business, bro? You kind of know your way in and out. You worked in this industry. You know that at the month of April or May, this is what can happen. And this is because of my location. It's because of I'm not targeting the right customer. These are the things you got to ask yourself. And as an entrepreneur, business owner, and I run multiple businesses, I've asked these of all my businesses, guys. And so if you think I don't, I'm in this even every single day and helping business owners understand that. So let me get back into this. I know we're past the 20-minute mark. We'll try to close here soon. So collateralized funding over here. Now you have the RB, not like RBs, but revenue-based financing. This is where a lot of business owners fall into. And this is just where you are getting funding based off of your bank statements, cash flow, revenue-based. We can look at tax returns if necessary when we're looking at getting you funding between 150 and above, or sometimes 100 to 150. Sometimes we'll ask for it depending on your situation. If you're already over leveraged, sometimes you may be taking more advances and we're getting you approved for over 100,000 on your second or third one. In some cases, they might ask for it. That certain lender might want to get that information from you. Other times you may not. Yeah, they'll just say, hey, we're an A-tier lender. We don't even need to ask you for those documents. We already know that you'll be worth doing this and you'll be able to pay us back. What you're saying is who you are and what you'll do. So this is revenue based on bank statements that we're looking at month to month. So many people, they come to me with that thought of, well, I wanted a line of credit. I wanted a business loan with 5 to 7 years and I wanted 10 years. And if I don't get it, and I don't get it. This is the part of this series where, hey, you may not get approved for everything at once, Mr. or Mrs. Business Owner, but you have to start off with an initial amount and work your way up. I know this doesn't sound like rocket science, but it's the truth that you need to start off with something. So a business owner generating 50,000 a month, getting approved between 50 to 100,000, if not a little bit less than 50,000, maybe 35 to 45 in some cases I've seen. Well, what happens is if you just started off with 60,000 to begin with, because we saw your risk profile, we saw how you're managing your money, the intake, the inputs versus the outputs, what comes in versus what goes out, at what periods. I look at all this stuff. And so if you're saying, well, I'm not wanting 60,000, I wanted at least 70 to 80,000, how about we deposit better? We find a way to say we can deposit more frequently instead of depositing the way we are, or we change our structure and our systems of our business to cater to one specific service and generate more revenue out of that. So it's not always like, because I'm not getting the funding, I don't want it. There's a deeper underlying issue to all of this, and that is usually coming from the structure of your business. It's coming from not understanding the financials, not understanding the patterns part of this equation, which also can make everything else much more difficult because you're skipping over all of these things. You're coming to me looking for funding at that point, and you are questioning then why it doesn't work. Well, I'll show you and I'll tell you why it doesn't work. And actually, before you even apply to funding, these are the little things you need to build. If you're going to go into an LLC, an S Corp, C Corp, let's do that first. Let's do it because of this. There's this reason why it's better to do that, why it isn't, why we should just go get started now as opposed to waiting. So there are deeper underlying issues, and it's my job to solve these problems, these questions, these roadblocks, these obstacles. But when you bring bad attitude and the effort, how do you expect me to help you and give you the attention you deserve? So that's something you can control, effort and attitude, and it's very important. So let me go back into this. Revenue-based. That is just based, again, on the bank statements. We're looking at what are you producing month to month. We're looking at your average daily bank balance, average monthly, because your average daily bank balance, I want to say hours because we're all in this ourselves, is that tells us how much money you get to retain versus what comes in, what goes out. You have enough money to sufficiently pay back the debt on a daily, weekly, bi-weekly, monthly schedule, remittance. And if not, how can we give you 100,000 when you barely can make $100 that you keep at the end of the day when we're supposed to decline that file? But I did 50,000 6 months ago, Michael, and yes, those are great situations, but at the same time, they're not going to be helpful because what we're looking at is usually the most current 3 months, 4 months. Sometimes we'll look past that. We'll look back depending on what you're applying for and so forth. So without collateral, this is what you can get into without collateral WC. You can do that. Now, underneath this, now we're getting into the actual stuff that a lot of you are avoiding. So this is stuff that we want, right? We want to get the revenue based. We want that line of credit, whether it's collateralized or not. We want that business term loan of 2 to 5 years, FDIC, online, offline. We want that SBA loan over here and so forth. There's even a lot more things in between here. There's actually a lot more. There's setups and processes, but what I want to navigate into now is here, which is what? The PF. What does that mean? That's personal funding. So a majority of you are stuck at this phase of the process. This is where you're taking on a lot of personal credit debt. You're trying to debt consolidate, refinance those credit cards, other types of things you have going on, personal and in business. And you're turning to those personal loans where you can get between 1 to 5 years amortized, which it actually is good because it spreads out your term. Now, keep in mind, and I've been in these positions before, taking personal loans out before in the past, not recently, but I've been here where it can accumulate over years. So I'd rather have something shorter term than say, well, next year I'm going to have to file tax returns, or I'm going to have to make a bigger payment, or this is what's going to happen, or I'm going to take out another loan in about a year's time from now. So now I'm adding one payment on top of another. Now I have personal credit cards. Maybe I have business credit cards to take care of. And now I'm paying somewhere between $3,500 to $5,000 at the end of the month. And my business isn't going in the direction that I needed to. So instead of just trying to look for a longer term, you look for a way to get in and out. That's what I recommend. I don't have to get 10 years, 15 years, 20 years, depending on the funding scenario. That's, of course, it. But other situations are more viable to start with something less. Take less even if you would like to feel more comfortable. And then come back with myself because, again, like I said, I have access to the best lenders and underwriters. Be very careful of just applying anywhere and everywhere. I still have people who do that, who don't pay attention. They let their ego, their frustration, their stubbornness, they let something else drive them inside that they believe, that they think is right, but isn't necessarily it. And I see that in a majority of cases. Who else than me to see that all the time? And somebody who's gone funding for his own businesses, excuse me. So back to this. This is the personal funding scenario: personal loans, personal term loans, installment loans, also known as. You have the personal lines of credit, the personal credit cards. Maybe we can add some business credit cards in a combination of, but are they 0% interest? We'll get into that in a moment. And so this is where you're using your personal side to get you funding, of course. And so the question is it something that you want to do? That's something that I can communicate to you with time. I'm not going to spend the majority of this video going into the scenarios on when it wouldn't make sense and when it would. That's for another time, and I've created content already on that in the past. So you have personal loans. You can use them that are unsecured without putting a home on the line, without putting a UCC lien on your home, your business assets. We don't need to do that. Now, we do have lenders who are going to collateralize. There's some cases where if you want to do collateral, we could. You don't have to. But if you have a home, you have something you want to do where it makes more sense for you to do a personal line of credit instead of a home equity line of credit, I honestly would do that myself. If I can leverage those tax returns and do it like that instead of pulling equity out of my home, even if the interest is going to be slightly higher than a HELOC in some cases and some other advantages, well, I'd rather do that initially that I can withdraw from and use that money as I choose instead of trying to just go strictly right into the HELOC. There are other situations and people don't always have that advantage. So keep that in mind. Now here, we just spoke a little bit about the personal loans, and you can say start here, but we're going to go even deeper. The startup loan can be a personal loan. Personal/startup loans, we can do a combination of things. So the start can be down here, but or the PL, the personal loan, can be down here, and it mixes. These kind of infuse with one another. But down here, you have the very bottleneck of everything. So here, and there's more underneath this that I'll get into in a second, but personal credit, business credit. So for a lot of you, it's just personal credit, dumping in loans on top of your personal side. what we need to focus on is the actual diagnosis instead of just masking these symptoms of I need to get that. Well, you're not going to get that funding. You haven't fixed your business credit. You haven't even established it. Your personal credit doesn't look well. So we got to come back to the very beginning, and that's optimizing that credit, whether it's the form of credit repair or not. A lot of you are avoiding things because it goes deeper. Like I said in the beginning of this, there's a fear-driven cause. There's a belief system around that. And there's these stories you've been creating in your head or just been putting something off for a long time. And instead of actually eliminating it, you just diminish it. You just lower it. You just mask it. It's sitting underneath that bell curve. It's just in there, musking and collecting dust. And instead of that, you should be saying, I'm going to eliminate this right then and there and move on. And what? And that happened. And so then you move to the next stop instead of giving it more power and emphasis on where your past was, where you are now, instead of focusing on the actual diagnosis of these things and just trying to get something that doesn't work for you at the end of the day. So again, here we have the personal credit, business credit, and differentiating the two, putting a division between them, and making sure that you're establishing that business credit profile through vendor credit, revolving credit lines, getting personal credit cards out of the picture where you're just adding on top of many of them and using them to fund your business. You should be looking at getting business credit cards, even getting the ones at 0% interest for 6 to 18 months and having an optimized credit profile to get you. Can you get in with 650 and establish some kind of business credit cards and even more or less? Of course, but they're going to require stricter guidelines, and it's not always going to be in your best interest, and you won't always get approved, and you won't always get the highest limits. So when you're getting your business credit cards, I always recommend having somewhere between a 680 to a 700 and above FICO Experian, and they're going to always look at the three, and where they're going to pull from depends on the card. And there's a credit card stacking program where you can add multiple business credit cards from the U.S. banks, the Banks of America, the Chases of the world, the Truist, the Key Banks, and you have to do it structurally. It's not just saying, I'm going to go and apply for a business credit card, because you're not maximizing the amount on your return. So somebody who goes to apply at a bank by themselves may not have everything that they needed. They shouldn't even have gone to apply for that card. And now they have another inquiry. Now they got to wait for something else. They're not doing it structurally. As opposed to myself and that other business owner who goes, yes, I want more business credit cards. I already have some, or I don't, where I want to build up a little bit more and have more flexibility and get free money to begin with for 6 to 18 months. It's a no-brainer. So back here, we're going to close up here going into 32 minutes. And I don't want to go too into depth, but here, let me circle this back. So at the very bottom, of course, is building your entity or your structure, I should say. Everybody has a different one. So I know that doesn't look right. And then F for foundation, not F as in an F grade. I mean, you could get one if you didn't build this correctly. But at the very bottom of all of this is just a very self-explanatory, the parts of it, And this is where you are building out maybe you're getting into the articles of incorporation. You are forming your business address, your business name, your entity type, how you file your returns, what you're writing off, what you plan to write off. There's so many things that can go underneath that. And these are the things that I help business owners with. And these are the foundational elements. It's also infused with putting a business plan together, even before you start maybe an LLC, or if you're not there yet, you'll get there eventually, if not. But even before any of that is formed, you have to understand your position in the marketplace. That's the key part of this, is understanding your place in the market. Are you getting into a business that's increasing, something that's decreasing? Do you understand the market trends of it? Do you understand how to make your SMART goals? Do you understand how to devise a business plan correctly with projections and assumptions? Because eventually when you get an SBA loan, that's what they'll be asking for. And I spoke to my lenders on this, and I go, if it were me, I would have had this for you. I know how to do these, and you wouldn't have to ask for a revision on this because I can put these well together. And so what you got to understand at the very elemental component, it's like chemistry. You have the very lowest element, or you have the highest validity, or at the surface level, whatever you are building, and you're putting that into a compound where then you're building these huge products out of those reactants, whatever it is, okay? The thing you need to build is that foundational element on your business plan, before you even think about getting an entity and structuring it this way. It sounds cool. I'm going to hire 10 employees, but you got to understand the actual cause and effects. So if this, then that, because this is what I would be doing in a scientific experiment way. This is why I get good at creating these, because not because science is my favorite subject, chemistry per se, but the math and just understanding that the outcome and how I look at it is, let me put it in this way. Whether you're a English major, whether you're an engineer major, a business major, let's look at it from the example of mathematics. So when I was in school and I was putting together these problems that I was solving, a lot of them more intricate and hard, especially when you get into the higher math, I would look at a problem and look at how I can break it apart. Kind of like when I look at a car, or if you're good at doing those things, you look at it and you know the blueprint, you know how to break it apart, put it back together, or at least you'll learn how. So when I'm looking at these problems, I look at that and I look how to break it apart, of course, how to put it back together. But more so, I detach myself from that outcome. So I know, I likely will know the answer to this, but I go, how can I work backwards from the solution and focus on putting the problems together? So I go from the solution, I go, this is my end goal. It's not just funding. This is where I want my business to be. And if I have an exit strategy, this is what it'll look like. So I design that whole system around influencing that and increasing that output. So your input is everything underneath it. So my outcome is here. Okay, what is my derivative of 4x, dx, 2x? And I'm building a proportional substitute. I don't want to get into the layman's terms and all the extra jargon on the vocabulary. I love math and all that, and to respect it. But what I want to say is you have to build the blocks underneath that to get to that outcome. And if you kind of don't know it, yeah, it can make it a little bit more harder. But this is where you're seeking that guidance and that mentorship from someone like myself and others, especially those in your industry, that'll help you build. And then you get to the problem. You're like, okay, I know the answer is 6x, 12x over here, but how did I get to 12x? Here's the last step before I got there. Here's the step before that one. And then here's this one. So you're putting that whole puzzle piece of the problem together into one that then forms that outcome. So a lot of you are neglecting these things and looking at it as, well, I just have a problem. I don't know how to solve it. It's one thing that you don't know how to solve it. That's what I'm here to help you with. But it's another thing to say, hey, I might know the outcome of it, but how do I work backwards from that to the major problem? There will be a lot of them in between, many different ways of solving it, but what is the main way to solve that problem? And that's where you focus on. That's where you devote your energy and time, especially in the beginning stages of your business. I can say I have 4 different ways of solving this science problem to my stoichiometry. I know how to build my reactants and my products, how to do all this thermal chemistry and thermodynamics, but I'm looking at it as, what are the given, what are the unknowns? So a lot of you have to break it down as in, what are my given, what are my unknowns? So I'm given the outcome, or if I'm given the problem, my given is I have this variable X. My unknown is variable Y and Z. How do I get to variables Y and Z? Those are the little things you guys have to be asking. And if you don't know the outcome, it's okay. But building those blocks together are going to be what just transcends you over time. And building something for now and just keeping it like that, it's going to be more longer term instead of that. So I know these are a few things we went off on a tangent, and I can break these things down in another way. I look at tax returns from people and I understand what expenses, what their gross margins or revenue is looking like, what it could look like. And maybe there are things we need to trim, things we need to do better at, so you can have more cash flow, more profits into your business, and you walk away happy at the end of the day, whatever it is you're trying to do. So I think that's where I want to end this video. Let me quickly go into this. And at the very top, again, I know this isn't a sexy topic. A lot of you guys are like, well, I want to go look for that loan. And no, that's not how it works. So here you have to look at an SBA loan. Usually it's at the top of everybody's list. Does everybody get one? No. Well, you get one, maybe not, until we have everything that we need. Underneath that, you have business term loans, whether they're secured or unsecured, lines of credit. secured or unsecured collateral. Underneath that, you can kind of say more or less here and here. We can get you an AR line of credit, business term loan, securing it with collateral. If you do it traditionally and in other ways, collateral, that can also be an inventory line of credit, real estate, heavy equipment, etc., stocks, etc. You can go on and on. Underneath that, you have the revenue based. This not being collateralized, we can look at bank statements. If tax returns, when you're asking for more, we're looking at the revenue coming into the business, cash flow, although we do not always do that cash flow analysis per se. There's different ways of looking at it from a revenue perspective on a month to month and an annual gross revenue perspective. But underneath that, then you have the personal funding. You maybe want to get or need to get a personal loan. But what happens is you might combine it with a personal loan, a term loan, installment loans, personal and or business credit cards. And eventually, and I'm going to get into a plan here, but underneath this, then you have the starting point with your personal credit and business credit, differentiating the two. Once you get to differentiating your business credit, you might be already up here somewhere with the revenue. You might have already just taken revenue base. And now we got to work on your business credit at the same time that we're doing that. And I'll have a very structured way of going upwards in it. And then your personal credit won't suffer. You're only using personal credit and as much as you need to on your usage rates. You bring that down. And what ends up happening is that your utilization becomes a lot less. You're just using your business credit cards and using those as much. So when you come to apply for funding, it won't be in the question of, do I have high balance credit cards on my personal side that are going to affect me getting funding? Oh, do I have a bankruptcy of way too long that hasn't been removed, but I'm using business credit. I'm using my business credit cards. That will have a reverse effect. And so when you're getting into that element, then now you're truly speaking and working as a business owner. But until you just keep leveraging your personal credit cards and we're going back and forth on this and you're like, well, I wanted this, I wanted that, and you're causing me inefficiency, you're causing me energy and time strain, that doesn't look good on you and it wouldn't look good on me. But I'm going to help you understand what you need to do to make sure your profile looks better. I won't just start like getting in and bashing you. I'm just going to start getting into things and making sure that you're taken care of as a person and in business. So understand that at the bottom level, then you have the entity, making sure you build that business address, making sure everything is how it needs to be done, your tax returns, making sure you're filing quarterly, depending on what you're doing. There's a lot more things that can go and get involved with this, having the right accounting software, if you have that, having the right team in place, your business plan, like I said, and so forth. So here's a quick situation where I've had business owners, and I apologize if it's dark. I have the window open here. I can turn on the lights. Doesn't make that much of a difference. I have the HP lighting on, but it's not always about that. Stop thinking about the quality of the video. You see all these other YouTubers creating quality content in terms of the video production, which eventually I may get, but I want this to be as raw and authentic as possible. And authentic and raw for me sits more than somebody who's just creating a lot of not necessarily fluff, but there's a lot of video production behind it. And I question whether that business owner or that person is somebody that I can rely upon or trust upon, and I only find out in time. I really do my due diligence on people. And so here's this quick loan scenario on the personal loan, and we'll close up here. I have a lot of business owners who come to me who go, well, I have multiple uses of funding for, and I'm not going to break down each one of those or give you guys an exact scenario, but I have people who come who want to consolidate, refinance. They want credit cards lowered, their balances are going to lower by getting funding to pay off other funding, and then they need to use the rest of it for real estate, land, boats, what else that they need to use that funding for. And this is why the personal loan is so flexible, because other types of solutions, you may not get the funding for real estate that you need. You might not be able to do it traditionally, or for other reasons of funding, it might not get you approved for. You might be looking at a lower interest and a longer term. And there are many more reasons for that as well. So it all depends on each person's situation, and I'll come to the comments in a moment. So from person to person, it varies. But the example to this is saying if you have multiple uses of funds for, then you take that personal loan. You have to do the numbers. I'm very savvy at this stuff myself. So I'm going to say, how much am I already paying? What other debts do I have? What have I built up in my credit history? Okay, so I'm currently paying around $2,500 a month. Maybe you have a student loan. Maybe you have personal credit cards or something on your business credit side that you're trying to do. All right. Now, would it make sense for me to take a lower APR to then move into a higher APR? Would it make sense for me to start something with medium to higher rates so then I can take some of that funding on a cash advance or a term loan funding and then pay off and consolidate some of my personal loan? But if I said I'm going to take this amount and I need the funding right away for what I need it, okay, let me start off at a minimum of at least 20,000. I realistically needed 50,000, but I can do between 1 to 2 years. I don't need too long of a term. I want to pay that personal loan off actually in 6 years if I can make that payment as fast as possible with no prepayment penalties, early payment discounts, etc. All that, great. I pay it off in 6 months, however much I get, and these are numbers we can do in time. And you go, okay, in 6 months, or at least my 6 months are coming, and then I'll be at a low at I owe about $150 remaining. Okay, great. So at that same time, your utilization is low. Your debt to income will be lower, or where it was before, it could be lower than that. And then you think about it, and you have to say, now I can get revenue-based. I'm actually going to take that revenue-based funding. I'm going to pay the remaining amount of that. All I'm going to have is one big cash advance or a term loan, and I'm using that, and I'm paying things off with that. At the same time, I'm using it to grow and expand. So this is a scenario where, of course, you have to understand, and we can do things with the soft pre-approval, and you understand at that point your numbers. That's what I do all the time. I go ahead and say, okay, what can I get approved for in the soft offer? What is my actual hard offer? All right, that's not bad. It's not all about the interest rates. I know some of you guys are rate sensitive and you're accumulating other things, so you have to look at that even more closely. I get that. I've been there, done that. But the thing is, it's not so much about the interest rates at a point than it is about the benefit. If you're not taking these funds to multiply, to double, triple, quadruple, or you're just trying to save, you're just trying to spread your workload for working capital, for emergency funds, or for other reasons, for mortgages, payments, then yeah, that's a viable solution. But at the same time, use this money as good debt. No more bad debt, or if you're using it temporarily for bad debt, get out of that. Understand these numbers, guys. You guys got to really sit down and say to yourself, if I'm going to use this for real estate, I have a rental property, I have an Airbnb, that's where I'm going to use 85% of my funds will be allocated to that. I need to use at least 15% of these funds to pay off some high interest credit cards. I'm over my introductory period or wherever I'm at on all of this. Okay, with the remaining funds that I'm going to be using in about a year to two, this is what I project to have still on hand. So if I had an additional $2,000 from that personal loan or whatever that revenue-based loan is, here is what my situation is now. My funding needs change. I'm actually building my business credit. I actually have access to 2 business credit cards, but I need more funding. So I have $20,000 in limits, but I actually needed $30,000 now, Michael. But now I'm generating in my business $20,000 to $30,000 a month instead of where I was at $5,000 or so forth. And so from there, now you're getting into another program. Okay, so that's how this works. Joanny, how are you doing? You received the SBA loan, but the 10K grant, I received it as an error due to bank changing. What can I do to receive this grant? Well, first of all, you'll want to communicate with the person handling your file. If you can refer to your email, you can always send them an error due to your bank changing and more. But the grant right now is not something that it's hard to get. Some people are getting it at this time. Others haven't been. And there's been this huge hearing with this committee, with Congress, within Senator SB Administrator Guzman, Isabella Guzman, excuse me. And what went down on that, I haven't spoken about that in this video. But out of everybody coming together in that hearing, it turns out to be that like nobody's getting any help right now. And it doesn't look like it'll be that way for some time. And how they're allocating their funds through the SBA department, through the Treasury, where the money's going, how it was put into other programs for relief and so forth. Right now, it's looking not so good until something else happens. But I wouldn't be sitting on that 10K grant. My question to you, and the whole premise of this video is, have you worked on your personal and business credit? Are those issues at hand right now? See, those are the things that we should be more focused on. It isn't necessarily I want the 10K grants, I want the SBA EIDL loan. Well, I was affected because of COVID. My credit went down because of a marriage, because of a lot of reasons. I get that. That's okay. There's a time and a place. But if you had that chance to dispute things and then increase your credit in different ways, why haven't you? And why have a lot of people been sitting on not fixing their credit? Well, because I don't have the money, I don't have the budget to, I don't have the necessary need for it. So a lot of business owners are getting into this trap where they don't think there's a solution and just going to the thing that's like immediately, like that's what I want. I want that 10K, that 20K. And it's like you completely avoided the foundation. And when people come to me and go, hey, I want this funding, it doesn't end up working for them the majority of the time. So 30 more seconds. Does anybody have anything? I said I would close up short in this video, so I apologize to you guys. Sometimes this does go on longer, and the longer the better in some cases, so you guys understand this and not underestimate things and not just go and view other YouTubers just creating content around grants and because that's what the algorithm picks up on, or because somebody told you about the latest no EIN or no SSN business loan up to 250,000. And that's so captivating. Who wouldn't want to watch that video? But how in depth do they actually get into it? That's the question you should be asking yourself. Are they very trustworthy, reliable? Are they an actual broker? Are they not just a glorified referral partner telling you to click the link down below in the description? They don't do any of the work on the back end like I do. And things just end up coming out and it's just like, doesn't happen for you, or you just don't really understand what you were getting involved with. And I see it every single day. Like right now, I can go to my email inbox, and I'm sure a couple of people have emailed me since this, whether you've been in here or not. And it's the same repeating pattern. Like I heard that already. Yes, you had told me that. Now here's the next step. And they don't meet me there. It's like they meet me back over here now. It's like, where'd you go? Like we solved the problems. Now you're just creating more, or you're just creating something that's inefficient. So what it comes back to at the end of the day, it's the character. It's the person getting in the way, self-sabotaging. Not everybody does this, but it's letting their own virtues, letting their own beliefs that maybe are misconstrued, or let that come into this world and play a major influence. And a lot of business owners hold up and they transition and they do something completely different. And that's why it becomes very unpredictable when I'm working with business owners. That's why I don't always jump on every call, because if I did, it wouldn't be always the best use of my energy and time. And pivoting and doing things that are not in your best interest and not focusing on the right things, not focusing on fixing the diagnosis and actually just masking the symptoms by saying, I want this, I want that, and putting your demands in list. And that's not going to do you any good. At a point it may, other times it just won't work. Okay, everybody. Appreciate you guys. Look down below in the description in time. I'll have the description. Refer there so you can start the questionnaire. If not, there's other information. And if you already did fill that out, I'll get back to you in time. And I believe I covered everything. Let me see my tabs here. Yes, I covered those areas and topics. We can go even deeper into each and every one of these services. But for now, all information down below. Application, I'll try to leave a link to, or that's why I don't always leave a link, guys. Like, contrary to popular belief, just put a link down below in the description to go and apply. That's not even productive. That's more counterproductive than anything, especially when people apply to something they shouldn't be applying to, whether they can or can't qualify. And I go, these people every day are applying to people on a YouTube channel or on a different place that has the link down below. Maybe I have it too, but I at least give you guys this information up front and give you guys another chance to go through another tunnel first that's more productive, and then filter in through the application. Okay, everybody. That's it for now. If you did get value, please share it with others who you feel will find value out of it. And if you haven't subscribed, please go ahead and do so and click that bell notification icon so you do not miss any future content I will be coming out with. Take care.